Welcome to Finance Revealed. Watch the complete video to discover new market secrets. Subscribe now.
What we've been seeing in the last few months really is actually I'm going to go to a Glassnode chart because what's happened, we're very unique circumstances in this 2021 bull market, and that is because we've got institutional investors and very wealthy, high net worth investors coming in on this market, which we never really have seen before. So this chart here, this Glassnode chart over here, is essentially tracking the coins held by participants that we can see on the network by looking at the address interactions and ascertaining how much Bitcoins they've got. And we can see that this chart here is the amount of supply that's held by whales, meaning they own 1,000 Bitcoins or more. And so typically you see whale balances, they tend to accumulate early in the bull cycle and they are pretty conservative. They hold steady in the mid bits, and then they way before the top of the bull market, they start to scale out. Now, what's interesting about this cycle is that we had a really strong accumulation pretty much from the time COVID happened with this market correction crash across all markets. Whales started to stack hard, and when I say whales, we're talking all sorts, including hedge funds, the Michael Saylors of this world with corporate treasuries, and very high net worth individuals. Now, they started to stack really hard, and you can see the balances of coins owned by whales climbing very steeply until this point here, which was in February, and then very sharp sell-off, right? So these are very wild, highly capitalized players that are taking profits up in this $45,000 to $65,000 region, and that's been very much the story of whales distributing their coins. These are the 1,000 to 10,000 Bitcoin entities. So these are our whales. Prices dumped down. Their holdings are very steady. The dolphins and sharks, 100 to 1,000 Bitcoins, they're holding steady. So none of the big guys are selling. And then we've got these guys here in this dip, they're buying 10 to 100 Bitcoins. And then we've got these guys, 1 to 10 Bitcoins, they're buying. Then we've got the little guys, the shrimps, they're stacking hard. And the tiny guys, they're stacking hard. No one is dumping into this. The only people dumping are speculative traders who admittedly have bought up a lot of the supply as the whole thing dumped. There's a lot more speculative coins on the market, but it's only technical traders that are been selling down. So I think it's just a matter of time before this bullish divergence on chain versus price action squeezes people going short out. There's a balance on miners' wallets, this line here. So they sold down in this zone here, right? Maybe that's due to funding. Like, this is the China ban right here, right? So not long after that, boom, a whole bunch of miners sell. Maybe that's to fund the mass exodus out of China, but that stopped, and now miners are effectively holding and even maybe they're even buying. So miners have stopped selling. Now I can go to the difficulty ribbon, which is an indicator I built a while back, which really is a measure of what I call miner capitulation, major capitulation by the miners. So you'll see, like, you can see it right here, right? You can see that whenever this ribbon is compressed, it's a bullish time. You should buy the dip there, all in this zone here, in this zone here, and obviously in this bear market bottom we saw in 2018 to 2019. And so I'll just zoom in Now, the fundamentals of how this works is like price crashes, like the mining is a marginal business in a bear market, right? And so the weak miners who aren't very efficient, they get culled from the network. They go bankrupt. When you go bankrupt, you liquidate, you sell all the coins you have, and they get dumped onto market, and that forces price down further. And so it's kind of liquidation dynamics happening, but it's from miners. And so eventually the whole thing sort of collapses, the hash rate drops off the network, and eventually the biggest, baddest, strongest miners remain. And you've just had a culling of the weak miners, and the strong miners aren't going to sell. In fact, they probably will buy, and they'll no longer sell their mine supply, because you'd be a fool to sell at the bottom, because all the weak guys who were selling have stopped, and you know it's the bottom. So this is what this ribbon picks up quite visually. You know, this is the difficulty of the network adjusting down for the loss of the hash rate, and then as it recovers, that signals a bottom. So we're in the zone here where the price is dipping and users are mooning, right, to the moon, like they're buying the dip. That is not a bear market. A bear market is where no new buyers turn up to buy this overinflated price. The price cannot sustain higher movements up, and it drops down to the ground. And what we're seeing is this week is a new all-time 2021 high for new users joining the network. We are in the middle of the strongest bullish growth of the Bitcoin network as seen this year. So that's not a bear market. So that's what the fundamentals say, never mind the price action, which is often a game of speculative, bulls versus bears. Capitulation ended here, and we had a slide down. That's a 20% drop, right? But you're saying we'll have another capitulation. That's not going to happen unless, maybe Elon Musk decides to FUD the world or something. I don't know. Maybe.
Yeah, maybe there was like a grand plan by Elon Musk to crash the price of Bitcoin into the mid-20s so he can scoop it up.
Maybe an asteroid hits the world and takes out the mining network,
Well, one is a little,
anything can happen.
Sorry. My hypothetical is a lot more realistic than an asteroid hitting us in the next month.
But anything can happen. But fundamentally, this is not going to happen if we take most probable outcome that there is a massive amount of coins being absorbed by the market. We're in an accumulation bottom, which means there's a floor on the price because strong buyers are coming in and mopping up all available coins on every dip. And we can see that in the supply shock, which is mooning. These guys are locking up coins into long-term storage as price comes down. There's a floor being put in place, even though technical traders aren't acknowledging it. And so what typically happens in these zones here is once the market prices in the supply shock and they finally figure it out, there's a short squeeze, and all the shorters buy back, and price rockets up. The shorters are going to get wrecked. Right now, the market's really interesting because there's a whole lot of traders like getting off on bear porn, going, it's going down, I'm going to buy a 20K. And when I say something bullish, they say, what do you know? You did this, that, and whatever. Majority of those comments aren't even accurate. They said, you said this would happen, and actually it did happen. And then the price action reversed afterwards, and they said, then this happened, right? So I'm like saying it's very symptomatic of the price action. But if you look at the follow account of key accounts like Plan B or mine, they're just mooning, right? And you never underestimate those kind of metrics, because what that means is there's a whole lot of people coming into the network and joining, and they're interested and they're learning. And so that's what we're seeing. This whole market is bullish while people are getting off on bear porn, and it's only the speculators. There is no long-term investor that is like getting off on this bear porn.
Bitcoin XRP, Bitcoin wallet, Bitcoin owner, Bitcoin history, Bitcoin news today, Bitcoin dominance, Bitcoin Bitcoin Cash, Bitcoin Forecast, Bitcoin Latest News, Bitcoin Miner.